Morena, kia ora, and if you could bottle that energy that we've just experienced over the last half an hour, that says to me this is a sector that is empowered, is positive, and wants to make a difference. So thank you for being here. Thank you for your energy, and we're really in for an absolute treat this morning. The theme, as I walked around the room, was gee, wasn't it great to have some time out and a decent amount of time out over the last 3 or 4 weeks to recharge the batteries, kind of reflect on what's really been a very difficult 3 years, but kind of coming back renewed, inspired, because things are pretty tough out there, and our sector, I think, has a lot of value to add to help New Zealanders make good and wise and informed decisions about how they run their financial lives and beyond that. So I think this mission and purpose around financial confidence and wellbeing for all New Zealanders is something that I know resonates in this room and outside of this room. So thank you.
Tēnā koe, Richard. Piki mai, kake mai. Piki mai, kake mai, ki runga o maunga ki ki taku pai, ko whakare whatahuna. Ki te taro atu pō titini, ki te taumata ko te manuārua ko te waiohua. Mō kau ki runga, tāmaki ki raro, manga toa ki wainga nui. Pare hauraki, pare waikato, te kao rō pā te tere, ki te nehe nui. Waikato tani wharau, he piko, he taniwha, he piko, he taniwha, tihe mauri ora. Ko te mihi tuatahi ki tō tātou nei kaihanga, ngāne te timatanga me te whakamutunga o ngā mea katoa he kororia ki tōna ingoa tapu. Tuarua ki te Māori, kingi tūheitia, po tatau te whero, te tuawhitu e noho i runga te ahu rewa tapona mātua tūpuna, rire hau, pai mārire ki ai me te whare kāhui ari ki nui tonu. Ki ngā mate o te wā, te wiki, te mārama te tau, kua wheturangitia, kua wehe atu ki te pō, moi mai rā. Kia koutou mā ngā kanuhi ora, ngā kanuhi mene o te rā nei, tēnā rā tātou katoa. Ngāti whātua ki o rā kei, te kahu tōpini o tūperiri, koutou ngā iwi take o tāmaki makaurau, mihi mai. Koutou ngā manuwhiri e noho ana te tuanui o tēnei whare, mihi mai. Nō reire te haukainga, nei rei te mihi. Koa na te ngākau i tēnei ata, hei tū, hei kai karakia, mō tēnei kaupapa, tēnei hui whakahirahira, hei whakarite, te whare nei mō koutou, te hui, kia koutou ngā kai whakahaere, te FSC, mō tēnei kaupapa, te outlook, rua mano mā, rua te kaumā toru. He mihi kaona kia koutou. Kia koutou, kia koe te rangatira, e uri nō te mana tātou hoko Aotearoa, tēnā koe. He mihi hoki kia koutou mā ngā kai kōrero tēnei rā, nei rai te mihi. Me huri ahau ki te reo Pākehā. Firstly, it's a privilege and an honour to be attending today's hui and today's event, to initiate the karakia, to whakarite the whare here today, and also to be joining the 2023 FSC and Financial Markets Authority Outlook. Firstly, I'd like to reiterate my kōrero in English. I'd like to thank our Lord and Saviour for our safe passage to and from today's event, but also, secondly, to thank Ngāti Whātua ki o Rākei, the descendants of Tupuriri, as well as the other surrounding iwi and hapu of Tāmaki Makaurau, tēnā koutou katoa. Lastly, the leaders and rangatira of the FSC, as well as other industry participants that have joined today's hui, I'd just like to thank you all as well. Nō reira, me huri ahau ki te reo Māori, hei whakawhiti te whare nei, hei timato tātou karakia. Can I ask us all to bow our heads, please, tuahu o māhunga? He honore, he kororia ki te atua, he maungārongo ki te whenua, he whakaaro pai ki ngā tangata katoa. Hanga e te atua he ngākau hau, ki roto ki tēnā o mātou. Whakatongia tō wairua tapu, hei āwhina, hei tohu i a mātou, hei ako hoki ngā mahi mō tēnei rā. I raro i tō ingoa tapu, ake, āmine, kia ora.
Kia ora. Thank you, Carlos. That's a very powerful way to start the morning. I'm going to now invite Rob Flanagan to join us, Chair of the FSC, just to say some brief opening comments. Rob, welcome.
Thanks, Richard. And the Board of the FSC certainly welcomed you all here today for our first session for 2023. with the amount of announcements that we've had in the last week, it's going to be an interesting year, and there's going to be, as a result of that, there's going to be an awful lot of opportunities for the FSC members to really influence the financial environment and the well-being of New Zealanders this year. And I know we look forward to, for all of you participating and being involved, because there's an awful lot of work coming at us, and I think it's going to be an exciting year. So thank you for your participation today. Welcome. Hope you get a lot out of today's first session, and hand back to Richard.
Thank you, Rob. And so on to the first session of the morning. My absolute pleasure to welcome Samantha Barrass, CEO of the FMA, to join us on stage for a few words. Just the way in which the FSC and the broader community connects, sorry Sam, with the FMA has, over a number of years, has been really effective. The way we engage together, not only in events like this, which are really important, but through lots and lots of working groups. It's a very effective way for the sector to connect with the regulator and to kind of align to some of the key messages. And so Sam, to you and your team, we really appreciate that spirit of openness. One of our key value drivers within the FSC is around collaboration, and this really comes to life when we work effectively with regulators, with government, with media and so on. And so to you and your team, a huge thank you. And with that, the floor is yours. Very warm welcome.
Thanks, Richard. E ngā mana, e ngā maunga, e ngā hoa whā, tēnā koutou, tēnā koutou, tēnā koutou katoa. No inga rangi o kutupuna. No reira ka mihi ki te whenua o Greenwich me te Awa Thames. Ko Ngāti Ranana ki te Patonga te iwi. I whanau mai o I Ranana, engari I tiwai tamariki ana aho, I tipu akeo ki Ototahi. Ko te whanganui atara taku kāinga noho nai anei. Ko Samantha Barrass taku ingoa. Ko taku mahi ki te mana tate hoko hoko, ko te mana whakahaere. No reira, tēnā koutou, tēnā koutou, tēnā koutou katoa. Ko hurio ki te reo ingarihi. Morena, thank you very much for hosting us this morning. I know that Paul and Clare are looking forward to speaking to you shortly. And I hope that everyone's been able to take time over the summer to rest and recharge for the coming year. It's going to be a busy year for financial services in New Zealand. And while the new financial advice regime and the conduct of financial institutions regimes are both at very different stages of implementation, I've been massively encouraged by the way the industry and the FMA are working successfully together to deliver both. And I feel and see a real cause for optimism in together understanding the important outcomes these regimes need to deliver for New Zealanders and making sure that together we're all resolved to deliver them. In other areas, our new consumer experience survey signalled a wider intention that we have to use behavioural insights and research to underpin our regulatory approach. And I'm delighted that Stuart Johnson, as our first chief economist, will further this work. Stuart starts with us soon, and he brings nearly 20 years' experience as an economist and behavioural science expert in the financial services industry, spanning the banking and insurance sectors, as well as regulation more generally. So, what lies ahead for 2023? New Zealand financial services face a series of significant milestones through a period in which central banks around the world are having to take actions unseen for a long while to reduce inflation. We need to implement some critical pieces of new legislation, and there's been lots of time for discussion in recent years, but in 2023, this year, they really do become real. And we're here to support you as we transition through the introduction of the full financial advice regime, the conduct regime for banks and insurers, and the climate-related disclosure regime. And this morning, as much as indicating where our focus will lie in the months ahead, I also want to set out how the FMA itself is changing. At the FSC conference last year, I added some detail on the approach we will be taking to our work going forward, in particular, really leaning into a crystal focus on outcomes. I said that an outcomes-based approach is about the regulator and regulated working together to deliver the right outcomes for all New Zealanders when they interact with financial services firms. It's about working together to ensure customers get the right products at the right time and these meet their expectations. Ultimately, it's about more New Zealanders than ever having justified confidence that the financial sector is working well for them. And that lens, more New Zealanders than ever having justified confidence, is the lens through which we will do our work. It's our departure point for the broad range of issues that we will work together with you on. An outcomes-focused approach does not start with what the legislation says or the rulebook says. It starts with what is the right outcome for a strong sector that works well for all. This approach ensures regulations and rules are a means to an end rather than an end in themselves. The real end is fair outcomes. And internally, the FMA has been doing some significant work to prepare for this shift. We've created new roles and introduced a leadership structure that enhances an innovative, forward-looking capability, as well as underpinning a collaborative, strategic approach to our core licensing, monitoring, and enforcement work. Both are critical for a regulator that has grown significantly in recent years and has much to deliver. We'll bring new people on board, recruiting from both New Zealand and offshore. And some of those roles have already been advertised, and some will be advertised in the months ahead. And this shift will begin to take effect from February. So what does this mean for you? Internally, there should be much closer alignment between our teams, enabling decisions to be made quicker and at the right level. I'm looking for shorter decision-making chains in the FMA. We'll be looking for greater integration of economic thinking, research, data and insights to inform our areas of focus. We also will be wanting to examine the outcomes of our decisions and our interventions more, considering fully whether our actions have the desired effect. Our aim is to be self-aware, learning and improving regulator, continually assessing and refining the way that we articulate and deliver on our mandate. And as I've met with you over the last few months, one of the things I keep hearing is, oh, this sounds great, Samantha, but it doesn't actually reflect what we're experiencing all the time when we speak to the FMA. And to this, I'm going to say two things really up front. One, these changes will take time to bed in at the FMA. Delivering outcomes-based regulation requires a fundamental shift in rethinking about how we operate. Our new structure enables us to get this work rolling, but it's a long-term evolving project. It's not going to be a single snap-it-on overnight change. And our commitment to and practice of strong stakeholder engagement remains steadfast, and that will remain throughout. And the second point that I think is important to make is that our policy of credible deterrence is not changing. People have heard me say that we are not enforcement-led, and the fact is we've never been, except for at our very beginning, as some of you will remember, when we inherited the finance company collapses. But since then, the FMA has applied a range of tools in our work with all of you and with our licensed population. And maintaining a credible intervention and enforcement function is absolutely necessary to promote integrity and confidence in markets and financial services. We will use litigation tools when we see egregious examples of serious misconduct. We should and will always be prepared to act where necessary. We continue to have significant fair dealing breaches reported to us by a variety of financial institutions. It's now almost 5 years since the conduct and culture reviews commenced, and the legislation being breached is now almost 10 years old. A week ago, we published the outcome of one piece of enforcement. In that case, the judgment noted the fair dealing breaches stemmed from decisions made by senior management rather than systems and controls issues. given my predecessor began by warning against complacency and continued to warn of this throughout his tenure, I'm sceptical if I'm told that the FMA needs to stop looking back and start looking forward. Yes, we are looking to the future to deliver KOFI and the other new regimes, but that doesn't mean that issues that have occurred should simply be ignored. These cannot be brushed aside as legacy issues if customers are still affected or out of pocket today through systems that should have been fixed and invested in years ago. The roles of the industry and the regulator are to engage, support, and deliver for consumers. Acknowledging and rectifying the issues of the past is a part of that. But I'm also conscious of the time it's taken to resolve some of the issues that we've uncovered. And my goal is for the FMA to deliver responses to breaches faster with expedited outcomes. An important part of our approach is a commitment to collaborate and engage with the industry. Our approach is very relationship-based, and this is no way mutually exclusive from the importance of maintaining a credible deterrence function. We will do both, engage and enforce. The public, the government, and those with the industry committed to their customers who put all the investment into working with us and complying with new regimes expect nothing less. And I'm going to let Paul to build on the work we're doing in this area shortly. This year sees 3 new regulatory regimes being introduced, and it's critical that we all work together to deliver these. In some, like KOFI, we're simply catching up with international norms. In others, like climate-related disclosures, New Zealand has been a pathfinder. And I want to acknowledge that this does create additional demands and efforts from the industry. And if I would make one observation in relation to this from my first 12 months, it's that all the industry bodies that represent you and your sector would benefit from more resource and input. And I do assure you I haven't been paid any money to make that comment. The FSC has played a really important leading role in the past 5 years in navigating a period of change. Under Richard's leadership, it has upskilled, upscaled, and increased its engagement with the senior staff at the FMA and across government. And the FSC is, from my experience, a great example of what can be achieved. I'm also speaking from my 5 years' experience in an industry body earlier on in my career, as well as years of working with industry bodies as a regulator, when I talk about and really want to underline the real value, particularly as we're expanding remits and regulatory coverage. There is huge value in investing to equip industry bodies to support you and ensure that regulatory and legislative changes proposed are appropriate and moving in the right direction. There is also value in industry organisations collaborating and discussing issues and proposing solutions. So from my standpoint, returning from my decades offshore, I see New Zealand as moving towards international norms in financial regulation. Legislation like KOFI tackles issues raised in the IMF's review in 2017, not just our conduct and culture reviews of 2018. This means that the elevated levels of change currently underway need to be acknowledged and treated as a part of a long-term international trend. And within this, it's important that firms don't inadvertently give the perception that they're looking to wriggle around the borderline of the regulations. Recent reports around performance management frameworks, correct or otherwise, provide a good example of what to avoid. In this case, the important outcome is that consumers do not feel under pressure when making important decisions about financial well-being. Whether it's a bonus motivating this, a desire to be seen as a high achiever, or the fear of losing a job, it's just wrong. And when we in the FMA talk about outcomes-focused regulation, this is what we mean. And the benefit of licensing conditions, fair conduct programs, this kind of more principles-based approach, combined with us really thinking about the outcomes, is that we will and are able to take a very holistic approach to whether firms have processes and behaviour that have the potential or can or are leading to poor behaviour and poor outcomes. So we will purposefully look to take a broad approach to how we will use our powers to make sure there is a strong focus on consumer experience in the financial sector. We've highlighted conflicted conduct as a major barrier to achieving fair treatment and good outcomes. Firms responded really well to our bank incentives review in 2018. Conflicted conduct leading to poor customer experiences will be high on my agenda and the FMA's regulatory delivery team radar going forward. Our priorities will be driven by the new regulatory regimes that are being introduced and setting up the FMA for the future in what looks likely to be actually a really quite difficult economic period. Both Treasury and the RBNZ are now predicting a recession this year, and New Zealand financial services faces a series of significant milestones, while at the same time the economy faces some serious headwinds. This is going to be a huge opportunity for the sector to show that it can support customers through good times and the bad. Making sure that customers are properly assisted through this period is an important priority. The overarching obligation to treat customers fairly is an evergreen, ongoing requirement. The COFI Fair Conduct Programmes are not subject to economic conditions, nor are the requirements of the FMC Act. It's in the moments of economic stress that these protections are particularly needed to endure, and Clare is going to speak to this shortly. So here we are, back to work from the summer break for most of us. Can be a bit of a challenge, whether it's been great weather or not. I think sort of doubly so this year as we all go into 2023. But I really do hope that the break gave you a chance to enjoy the beautiful landscapes and coastlines, friends and family, whether in sunshine or in the rain, as I know some of you experienced in parts of the country, at home or abroad. And these moments are fantastic for grounding, recharging, and it's so important when times get tough. They really do help us to bring a sense of perspective. As part of our internal work, the FMA has refreshed its values. Looking to the horizon, Te Pai o Te Mana Warangi is now at the heart of Te Mana Tatai Hoko Hoko's values. It's there to remind us, as regulators, to remember our purpose, to be willing to adapt, embrace changing circumstances, and to look to the horizon, look to the future. But looking to the horizon also serves as a reminder that having more New Zealanders believe that the financial services sector works well for them is a goal that can unite us all. We can foster the fairest financial sector in the world, even when markets are uncertain and the economic winds are difficult. But it is only by coming together that we can achieve it. So I'd like to thank you for making the early start to come and join us this morning, and any questions that you may have before Clare and Paul come up as well. Thank you.
Thanks, Samantha. Tēnā koutou katoa, ko Vanya Thomas, taku ingoa, Atamarie. Thanks, Samantha, for your pepeha and for your instructive regulatory keynote. I'm really delighted to have this fireside chat with you. There'll be lots of great questions, I'm sure, but while people sort of get busy with Slido, I'll just get the ball rolling by picking up a couple of the key themes that have been mentioned. So just to start off with, Samantha, you've talked a little bit about the new structure, about the recent appointments to your team. I'm sure Paul and Clare will talk about their roles, but can you tell us a bit more? How's it all going?
Is this on?
Yes.
You can all hear me, great. It's coming together really well. Obviously, massively delighted to have the talent that's Paul and Clare and Liam to be able to join me in the team and to appoint our first chief economist. We've got 2 more executive director positions, one covering transformation and the other covering sort of strategy for us. Those recruitments are going well, and I have to touch lots of wood, as those of you who've been involved in recruitment know, but I'm hoping to be in a position to make some announcements shortly. So it is all coming together really well.
Excellent news. Now I can see questions coming through already, so I'll just start with another one of mine and then we'll go through some Slido questions. But what we're really seeing is lots of cooperation with regulators, particularly the Reserve Bank. And you know, we see that from the annual report released yesterday, it was one of the statements of intent, so presumably that's set to continue. But where do you see the real value in that?
It's hugely important. Our working relationship through COFA, we in the RBNZ are joint chairs of COFA. It's hugely important when you have prudential regulation and conduct regulation in two different organisations, that those organisations work really well together, because because you need to be able to pull off the joint outcome of strong financial stability in firms in the financial sector, alongside them delivering great products and services to their customers. And that's delivered by a close working relationship between the RBNZ and ourselves, and it works really well and will endure.
Okay, so investor confidence in the financial markets has increased steadily to 72%. So how does this level compare globally? And yeah, how does it compare globally, and how much better can it get in New Zealand?
Oh, well, I always think of it as 72%. There's another 28% to go. So it's about kind of continually improving. I suspect, I just sort of don't have, all the global figures to hand, but, generally I would say that in New Zealand we're doing pretty well. We have not had here in this country, we have not had the huge impact of the energy price shocks that there has been elsewhere in the world. We have been sort of slightly protected from that. We haven't had. We're not as if you're in Europe, I've just come back from Christmas in the UK, and the proximity of the Ukraine crisis, to when you're living in Europe, all of that does have a knocking of investor confidence. So I think New Zealand's in a really, given the headwinds that we face, I think we're in a good position to continue to work together to kind of really lift that confidence.
Thank you. How far away is the FMA from providing some more specific guidance on COFI?
Oh, well, I think Clare will be in a great position to pick that up. As you know, licensing opens up in the middle of this year, so there will be a continuing, we will be continuing to support with further guidance. People, we won't be sort of hanging people out for too much longer.
And a question here about the sort of, compliance approach versus a more outcomes-focused approach. Principles-based compliance is incredibly difficult to implement and with no finish line. In practice, how will firms implement this, in your view?
Yeah, well, let's look at the COFI legislation. The central requirement of the COFI legislation is that you develop and implement a fair conduct program. So that that is at the heart of it. I think a great place to start, and I gave kind of an example in my speech, and it's the lens that we're looking through it, is to almost sort of ask yourself, how do my processes, how do my policies, how does my new product development, how do my remuneration processes, how does that all impact on my customers having confidence in the quality of the services that I'm providing? And if you can articulate that, then you're starting from a great place. And it is it will ever, part of the ongoing business that you will do will be to continually ask yourself those questions. But that kind of thing, how does this benefit my customers? How does this equate to fair treatment of my customers? And how am I going to test that? Am I going to be testing that the experience that my customers have? I've given the example before. Is it as easy for my customers to exit a product as it was for them to get into it? I might think that I know how to do that, but am I going to be testing that? How does my testing of consumer experience work?
And then just interested in maybe if you could amplify a little bit on how the sector is responding to regulatory change. You said you're encouraged, massively encouraged.
Yeah. We in New Zealand have the great opportunity of our population size, and so it's easier for the industry, for the sector, and ourselves as a regulator to work together. And we've got that kind of, I think that kind of hugely shared philosophy on really kind of making New Zealand a better place. I think that's a very strong core that runs through it. I have been massively encouraged over the last year by the responsiveness of the industry, the way in which, they kind of, we come together, we work together, there's kind of an openness and a transparency in the way we work together. So it's just really leaning into that more.
And a question about crypto. So what steps is the FMA taking to address risks in the crypto sector?
Yeah. So it's a big question. Where crypto is a financial asset and comes into the definitions of the various financial assets, then it is treated in the same way as any other sort of financial product that comes through. The critical kind of approach to the risks of crypto are very much around the public warnings. That is particularly where there is the risk of New Zealanders engaging in offshore crypto enterprises. It's really kind of getting the message out there that you need to beware, because there's a whole lot of things that we just simply cannot control.
There's a question about self-reporting, but I wonder if that might be one that Paul will pick up on, or shall we? The question is explaining the value of self-reporting remediation incidents.
Well, Paul will pick up that big detail. But I'm going to start actually with a big point, which is that if you're ever sitting around a board table and you know that something has gone wrong and you're dealing with it, the automatic point that should be coming into your head is, we need to tell the FMA. And if you're having a discussion around a table of, should we or shouldn't we tell the FMA, then you probably ought to tell the FMA. That's a great place to start. You don't wait until every other option has been exhausted before you tell us. So the minute any of you find yourselves saying, should we tell the FMA or shouldn't we, just tell us.
Understood. So you mentioned the importance of removing conflicted actions in financial services. This surely must mean the end of trail commissions. Yeah, so I think the way that I'm going to come at this is less around that it's quite a loaded question. As you know, I think the question is for here in this country, and we do need to do some more thinking about it, is how do we make sure that New Zealanders have access to good quality advice? And that's really the key question. How do we make sure that they get the advice that they need when they need it? And I think we do need to acknowledge that sometimes when people talk about New Zealanders are receiving less advice now than they were because of regulation around conflict. Actually, I think some of the advice that New Zealanders were receiving was actually more sales pressure rather than advice. So I think one of the I sort of did cover it in the speech. One of the things that I am really keen to come together with the industry and others on as we go, not just in 2023 but 2024, is how do we nail making sure that there are good quality conversations between providers and customers and consumers over what they need. So the classic one, if you're taking out an impactful loan, what are you doing to make sure that if you lose your job or you go, or you become ill, what are you doing to make sure that you can meet those commitments? I think there is a conversation that we do need to be having and coming together to have. So probably just time for one more, but just thinking about if we project forward to 2024, what will you look at as, one of your major achievements over the previous 12 months?
Okay, so that is sort of easy, which is given what we've got to do, we've all got a lot of work on our hands this year. For me, it's the calm, steady implementation, the no dramas implementation of the various regimes that we're implementing this year. That's the first thing. And the second is that we've together got a stronger shared understanding of what we mean by outcomes-focused regulation and what that means for how we work together.
Thank you, Samantha. I can see that we are totally out of time, and Clare and Paul are just amping to get up here. Thank you again for
pleasure.
delivering your regulatory keynote. We thank you for your insights and your observations, for your candour and for your willingness to engage. It's always much appreciated, as is your wealth of leadership experience and regulatory knowledge. 2023 is certainly shaping up to be a pretty interesting year for us all, so let's buckle up and work through it together. And now please show your appreciation in the usual manner. Thank you, Samantha. And so now Clare Bolingford will come up to the stage, and following Clare, Paul Gregory. So a few opening remarks about their respective new roles, and then we'll have a discussion and take your questions via Slido. Welcome, Clare.
Kia ora koutou. Nō ringarangi ahau, e tipu ake o ki Nailsworth. Kei whangaporawa, ahau noho ana, no turanga nui a kiwa toko hoa tāne, ko Ngāti Porou tona iwi. Kei te mana tatai hoko hoko aho e mahi ana, ko Clare toko ingoa. Kia ora koutou, many thanks for inviting me to speak today. I've met many of you before as the Director of Banking and Insurance, but this is the first time I'm speaking to you with a focus on my new role as the Executive Director of Regulatory Delivery. We've brought together the work we do with our various licensed or soon-to-be licensed populations into this new team so that we can develop a consistent and relationship-based approach to supervision across all sectors. What I've heard from you is that consistency is one of the things that you value and want to see more of from us, while at the same time being able to appreciate and adapt to the important differences in business models and services. There's been plenty of work going on, as you've heard, getting ready for our expanded remits and building on the mahi done so far. We will need to deepen our understanding of your business, not just so that we can highlight risks, but also opportunities to influence better outcomes for New Zealanders. We will listen and engage in problem solving, exploring the challenges to achieving good outcomes, and be flexible to different methods. And we will be clear and transparent in our communications so that you aren't in any doubt about what our view is. But as Samantha said, the changes will not happen overnight, and we'll be evaluating what works well and what needs adjustment as we go, including by listening to your feedback. The three new regulatory regimes comprising the conduct of financial institutions, financial advice and climate-related disclosures are significant steps forward for both us and for you. The new financial advice regime is a clear example of where industry and the regulator have worked together with a joint goal of smooth implementation. And to that point, again, I want to thank the FSC for all the work it's done in this area, alongside other industry bodies, to ensure our collective goals were achieved. We want to see New Zealanders becoming more confident about their financial futures and well-being, more confident about accessing financial advice and being able to trust that their advisor is working in their best interests. We all have a role to play in helping to promote the value of advice in making well-informed decisions about the products that are most suitable. As the 17th of March quickly approaches, the date when you must either hold a financial advice provider full licence or operate under someone else's, around 1,900 firms are now operating under that full licence. It also signals the end of the 2-year competency safe harbour, while all advisors and nominated representatives must be fully competent under the Code of Professional Conduct for Financial Advice Services. On climate-related disclosures, we're working closely with other agencies, namely the XRB and the Companies Office, to ensure that there is a smooth start to the regime. Over the coming weeks, we will be giving you an outline of what you can expect and when and how we can support entities that qualify. So for Kofi, I'd like to highlight a few key milestones. Our intermediated distribution draft guidance will be published next month. I know there's a lot of interest here, and again, I'd like to thank the FSC and other industry bodies for the role they have played in getting people around the table in a series of constructive workshops held last year. These open and honest conversations were a critical element to what I hope is getting guidance that will work for everyone. Kofi licensing will open in July, and we're currently in the process of planning more events that will focus on assisting institutions through the application process. When I spoke at the FSC conference last year, I talked about how Ko-fi is a move away from that box-ticking compliance towards this deliberate focus on outcomes, including proactive analysis of how products are actually performing for customers and not just the business. It's a message that you are going to hear from us consistently, from me, from Samantha, from the FMA as a whole. Ko-fi puts the onus on institutions to consider what fairness looks like and then formalise that in the Fair Conduct Programme, a programme where everyone in the institution can understand their role in treating customers fairly. As I've said before, you know your business best, and that's why you are the best people to design, implement and own your Fair Conduct Programme, and this will look and feel different for different institutions. You'll need to put yourself in the customer's shoes and be honest with yourself about what their experience was and is really like. I'd just like to finish with reiterating what we expect during the current economically challenging environment. Customers, some of whom will never have experienced anything like the current conditions, will be stretched and feeling pressures that they're unfamiliar with. They will be vulnerable. It's precisely at times like this that we expect firms to support their customers with clear communications, as well as plans and processes for navigating and ultimately successfully managing their problems and stress points during a difficult period. I'll now hand over to Paul, who's going to speak before we take questions. Kia ora koutou.
Ka tangi te titi, ka tangi te kāka, ka tangi hoki koa hau, ti hei mauri ora. Ko Paul Gregory tāku ingoa. Hei kai whakahaere te mana tātai hoko hoko, taku tare. Nō reira, tēnā koutou, tēnā tātou katoa. Morena, thank you Clare, thank you Sam. I'd like to develop a little further what Sam has said about how enforcement and regulatory responses in general fit in with being outcomes focused. As part of that, I'll talk about what's not changing and what will be different about our response and enforcement approach. First, what doesn't change is enforcement and other regulatory tools are part and parcel of an outcomes focused. Holding firms and individuals account for what they do and how they do it, deters misconduct, clarifies the law, supports investor and consumer confidence in markets, in services, in products and in firms, prompts improvement and investment in systems, processing capability, and helps level the playing field between those playing fair and those playing the whistle. These are outcomes. We know industry gets this, in particular the level playing field aspect of outcomes, not least because it explicitly underpins most of the complaints that we get from you about your competitors. And what we understand is a demonstrable will and ability to respond with regulatory tools is what we as a regulator fundamentally bring to the table. It's why industry pays attention to us in venues like this and individually. Regulatory response is the or what of good conduct. The stick, its shadow, and the sights and sounds of it being applied as an object lesson elsewhere. These are the key ingredients of credible deterrence. The second thing which won't change is the other key ingredient of credible deterrence: balance, proportion, precision, timeliness. We're clear it can't always be hammer time. Being jammed at the hard end of the regulatory pendulum risks consistently imposing unnecessary delay, burden and cost, undermining trust and confidence in the FMA and ultimately our ability to do our job. So we will continue to ask ourselves, how well does our selected response address the issue, including what is the actual potential harm? Is this a sector that is used to regulation or is it new? What is the track record and attitude to good conduct of the entity? Is public interest a relevant consideration? Is market confidence an issue? Sometimes, even often, a response is a well-placed conversation. Influence is an effective, versatile regulatory tool when used well. But stop it or I'll tell you to stop it again is not an effective and by definition not a sustainable regulatory approach. So adept targeting of regulatory tools will sometimes also require doing something stronger than the market expects. Not from lack of imagination or from zealotry, but from a judgment that the harm that we have seen requires and merits a response the whole market can see and hear clearly. So, what's going to change? Sam and Clare have talked about it. Our new structure is designed to ensure we identify and assess risks and then intervene or choose not to more effectively and efficiently where consumers, investors, our markets and our financial system get the most bang for buck. In my area, or what's going to be my area, this also means thinking more broadly about success and what that looks like, including at the pointiest end of the stick, enforcement. Most observers in media and elsewhere have a quite binary view, it's win or lose. We intend to evolve this mindset. We will still be thorough, we will still be rigorous, but we will also be prepared to be challenged on a regulatory action if the outcome's either that we win or we and others learn or otherwise benefit. Because even if we don't win, a case can help clarify the law, provide certainty for the market and consumers. The issue in its discussion can have ripple effect benefits, changes in consumer expectations and behaviour, changes in industry practice, changes in public dialogue about how things should be done. There is also value to industry and to fellow regulators and consumers and investors from what we do, for example, education, guidance, public engagement, after we have got an enforcement decision. Finally, it's worth taking a step back to acknowledge the FMA exists to change behaviour, backed by the laws which are our best available proxy for what New Zealanders need and want. Which means, as Malcolm Sparrow says, that even when we do our job well, perhaps especially if we have reinforced our credible deterrent well, not everyone will say thank you. Our role inevitably involves tension with industry, because to achieve the purpose we have been given and the vision we have chosen, we impose on private firms, mostly on their latitude to pursue short-term economic interests. But sometimes the imposition is, and sometimes it must be, more limiting and more serious. After all, if any regulatory matter does not involve tension with industry to satisfactory resolve, it probably didn't require regulation in the first place. Thank you.
Thanks, Paul, and thanks, Clare, and hey, congratulations on your respective roles. So let's get straight into it. Something sort of practical to start off with. Clare, you've told us what your regulatory delivery role will focus on, and Paul, you've told us about where enforcement fits in an outcome-focused environment. But can you tell us about how the two of you and your teams will work together?
Sure, shall I kick it off? So Paul's team and my team are going to be working very closely together, particularly as Paul has parts of supervision within his unit. So our specialist areas, AML, for example, and CFT, but also our supervision response area, which is focused on those complex cases that need that extra resource to work through. So our areas are going to be working incredibly closely together because we need our subject matter experts right across the organisation to be able to focus in on those outcomes that matter and work together. So I think it's almost like, although Paul has also got his enforcement angle as well, it's almost like we're effectively co-heads of the supervision unit.
Yes, and what Clare said about being consistent, that will be critical to how we work together as well. That will be the output from being on the receiving end of supervision and regulatory tools or enforcement, is that it's consistent.
Thank you. And thinking about the MIS value for money piece of work, and now the rubber's really hitting the road on that, how will the handover of that work?
So in terms of caring about the value and the importance of good investment management, it won't. I'll continue to do that. In terms of the MIS sector, whether it's KiwiSaver or it's managed fund outside of KiwiSaver, that's very much shared. So obviously there's a supervisory aspect to that, an ongoing supervisory, an important one. And Clare's area includes investment managers, and it includes supervisors as well, and they're critical to this. But obviously it's mature, so the KiwiSaver expectations for reasonable fees is mature, members' interest is mature, and so, as you say, the rubber is about to hit the road. We are about to start seeing the reports, and as we've said right from the start, that if there are disputed outcomes, if there's a reluctance to engage, then we're happy to have a different conversation, which will be in my area.
Thank you. So a question here, will the FMA have the appetite to take difficult cases you may lose in order to clarify those points of law?
Yes.
Good short answer there.
Yeah.
The CRD regime, it's already enforced for some in the room, but there is a sense it's a lower priority than COFI. Is that right?
Absolutely not. We see all of our three key regimes that are going through the implementation of equal importance. And I think it really, to my mind, brings to bear on the importance of this sector actually to New Zealanders and even on the global stage. I mean, the CRD regime, we are really very much at the forefront of what's happening across the globe on this topic. And so it's absolutely crucial for us. But it's also shows the value of working with partners as well. As I said, the XRB we're working very closely with, as well as the Companies Office, together with the rest of the industry. We're all learning as we go with this, so it's absolutely a critical priority for us. But Paul, I don't know if you want to add.
Yeah, I think it's not lesser a priority, it's just that we understand that there are very good reasons to take a different approach, at least initially with CRD, because it is new, because there are questions around data, because there are questions around the standards in terms of how they align with international standards when they come. So I think it's just a different approach because of different underpinnings to the different pieces of legislation, but that does not give them different priorities.
Really want to just explore a little bit about self-reporting. So, you know, that difference between responding to a request and proactively reporting, especially in the context of licensing.
Yes, so this isn't a new view that we've had, but it does seem helpful to reiterate it, which is, as you've said, responding in a timely and complete way to an FMA request for information is good, but it's not self-reporting. Self-reporting is when, you know, the board members that are sitting around the table in Sam's conception have got an issue or something they think should be reported to the FMA or not, and the option is theirs that they do so, so that we wouldn't have known about it otherwise. But I guess even there, that self-reporting can be in itself good conduct, but there are times when it does reveal that there have been systematic carelessness or something more serious than systematic carelessness about a problem that's gone undetected or worse, detected and unchecked for a long time. And so self-reporting can be, you know, it's a Snow White thing to do, but it can reveal a somewhat murkier iceberg, and as Sam said, it can show that the self-reporting has come at the end of the firm exploring every other possible option.
We really are unfortunately running out of time, but I've probably got time for just one more quick question, and it's in relation to consumer financial decision making. What's more important, performance outcomes or the availability of choice and the ability to exercise choice? Asked a hard one last.
Well, choice is an outcome, but if the choice is, if there's a multiple ways to access a poor outcome, I think it would be better than, I think it's inferior to a lesser selection of choices to achieve a good one. But obviously a mixture is best. To encourage innovation, to encourage different approaches to the same outcome. But if we're being forced into a binary choice there, then better outcomes is better than more choice.
Thank you. I'm sorry that we haven't managed to actually get through all the questions, but it's testament to just how interested and involved everyone is. So I'd like to thank you both, Clare and Paul, for speaking to us, and we're very grateful for your time and your insights. We wish you well in your new respective roles, and Richard's now going to join us. Home te paki paki.
And a huge big thank you again as we segue just into the Chief Economist update. You folks are welcome to stay on stage, or you're welcome to head to the audience. Thank you, Vanya. Look, that's an appetizer, folks. I mean, I think the three big pillars of change coming this year, we've all been immersed in them now for a long time, and I think we're kind of set for lots of work to make sure that these systems are implemented successfully. And certainly, the work, Sam, going back to the start of the FAA review and then the FSC regime, it's great to be in a position 2 months out to know that we've collectively done the mahi to make this successful. To the financial advice community in the room, financial advice is such a critical gateway for people to make wise and informed decisions, and so how that all interacts together is a really important part of the work that we collectively look to do. Folks, we are moving into the final conversation of the morning, and delighted to welcome Mark Lister from Craig's to give us an economic address, and as ever, Anna-Marie Lockyer, who has been such a key part of the FSC community now for many years, is going to similarly have a fireside chat. So, Mark, please come on up, and then Anna will join you at the end of your opening remarks. Thank you.
Right, thanks, Richard. Thanks for having me, everybody. My first day back at work was yesterday, so great to kick off the year at a function like this, and great to see such a well-attended audience as well. Fantastic to see. Look, so much happened last year. There's so much more happening this year, so I could talk all morning. I know you don't want that. I'll try my best to sort of squeeze it into 10 minutes, and then we'll do a bit of Q&A. But last year, a really challenging year for investors. Obviously, New Zealand shares down, I think down about 12%. That's the worst year we've had since 08. The US market was down about 19%. That's the worst year since 08. New Zealand house prices fell 14% nationally last year, and the Reserve Bank data goes back to the late 70s, and I haven't been able to find a 12-month period where we've seen a bigger fall. So everything was difficult across the board. Bonds were down 5%, New Zealand corporate bonds, and I think that is probably what made last year feel like such a tough one for many investors. Usually, we see down markets in housing and in risk assets like shares all the time, but it's very unusual and rare to see bonds have a bad year, or for those two asset classes to have a bad year at the same time. The last time you had bonds and shares both falling was 1994, I think. So that really did shake a lot of people, because if you're an investor with a bit of everything, then usually if your shares aren't doing well, your fixed income is, or vice versa. So it was a tough year for all. Inflation was obviously a big part of that. Inflation high all around the world. Here in New Zealand, it peaked at 7.3% in the June quarter, so that was the highest since 1990. It's come down a little bit since then. We'll get more data out this morning. In the US, it hit 9.1% back in June. That was the highest since Ronald Reagan was president back in the early 1980s. And in places like Europe and the UK, it was double digits. Part of the reason was obviously that energy crisis. So the response to that was for those very low interest rates and money printing and QE of the COVID area to be unwound. And we saw sharp quick increases across the board from central banks. So here in New Zealand, the OCR started last year at 0.75 and it ended the year at 4.5, which is a hefty move. That's the highest since early 09. In the US, they started the year pretty much at zero, and they were still doing the QE, and they ended the year with their policy rate at 4.5%. So that's an exceptionally fast pace of monetary policy tightening, 425 basis points in a calendar year. If you think back to 94, which was a tough year for bonds, that was 250 basis points from the Fed. If you go back to the Volcker years, Volcker did 400 basis points consecutively, once in 79, once in 1980. So to go 425, it's pretty much the fastest we've seen ever from the Federal Reserve, the world's biggest central bank. And I think that was a really big factor. It's not just the nominal level that interest rates have got to, it's the pace that we've seen them rise. So we sit here this year and looking ahead, I think inflation and interest rates will still be a big driver of how the year plays out. And we've got some good news on that front, because we are seeing the pressures moderate. So you think about inflation, US inflation for December came in at 6.5%, so that's still far too high, still well above where the Fed would like it to be, but it's fallen for 6 consecutive months. It's back to sort of early 2021 levels, and it's way down from that 9.1. Here in New Zealand, we'll get our data out in a couple of hours. It'll still look high. The expectation is that the annual inflation rate will come down a little to maybe sort of 7.1ish, so heading in the right direction. I'll be watching the quarterly numbers more closely. It'll be that if it's got a 7 handle, that'll be what's on the 6 o'clock news. But it's important to remember that that's picking up all of those sharp increases from a year ago. And the expectation for the December quarter is that the pace will be 1.3% for the quarter, which is still too high, but that's actually the lowest that we'll have seen since the June 2021 quarter, sort of 18 months ago. So things are going in the right direction, and I think that'll continue, because when I look at all the indicators out there, whether it's of supply chain blockages and issues, whether it's pricing intentions, all of the other reliable indicators of future inflation, they're all coming down. So things are moving in the right direction there. That's a good thing, and that's one of the encouraging points we've seen this year. It's one reason why markets have had a good start to the year. That does mean, I think, that the end of the central bank hikes is within sight. So in the US, they're at 4.5. Markets are expecting them to sort of peak out at about 5 over the next couple of months. So you might have a couple more rate hikes in the US, and that's it. They'll pause. Here in New Zealand, we're at 4.25. The Reserve Bank in November had suggested they'll get to 5.5. Maybe they will. Maybe they won't have to go quite that far. I'm a little optimistic that if inflation does prove to keep slowing, they might not need to go as far as that. But even then, the end is within sight. So those are two of the good things that we're seeing out there, and that's really encouraging. The inflation peak is behind us, and we are most of the way through these interest rate hikes. The bad news is that we haven't sort of seen the full impact of that on the economy. Because those rate hikes have come so quickly, it hasn't flowed through to the average person in the street in terms of mortgage rates, and you're just starting to see the economic indicators take a pretty serious turn for the worst. So I think the good news is that inflation's coming down. The bad news is that one of the reasons it's coming down is because we're heading into a much more difficult economic period. Maybe that means recession, maybe it doesn't. We'll have to wait and see. But that is the tug of war that I think you'll see play out across markets this year. You'll have those positive factors of falling inflation and central banks set to pause and do no more this cycle, versus the economic issues that we will face as the year goes on. So for investors, it makes for another challenging year. I don't think it's going to be as bad as last year. I think this year won't necessarily be a fantastic year, but I don't think it will be as bad a year as we saw last year. If I had to guess, I would say bonds will have a good year, because we've seen interest rates come up, so you're now getting good income from your bond portfolio, and I believe that interest rates are at a point where they sort of either go sideways or maybe even sort of drift lower if the economy sort of does it tough. So I think bonds will perform well. That's good. That provides opportunities for investors. As far as shares go, impossible to say. If there is a recession ahead, I suspect there is a little bit more weakness to come. You know, really interesting to note that in the US, it's very rare for the US share market to reach a bottom before the recession. The last time we saw that was the 1940s, coming out of World War II. Before that, it was in the 1920s, but in the 12 recessions that we've had since the 1940s, the share market has never bottomed until the recession is upon us. So if you think a recession is ahead in the US this year, then history would suggest there's a good chance we will sort of maybe go close to retesting those lows from October. So it's still a time for caution, it's still a time for playing it safe. But important to remember, don't play it too safe. I think for long-term investors, periods like this bring opportunity. And if you're investing for the long term, then it's these periods of uncertainty, it's these recessionary times, it's these tough times that you actually want to be buying. You know, you look back at the GFC or the COVID recession or other periods through history like that, it was actually a good time to put capital to work. So people need to keep that in mind and make sure that they don't get too negative and miss opportunities. Final parting comment, I think for all of us involved in the industry, everyone here in this room, periods like this are times when our clients need us, when everyone needs us. So the industry has a much greater role to play in a year like 2023, just like it did last year, than when you're in a raging bull market and life's good, it's easy, anyone can be a rock star investor because things are just going up. But it's periods like this where clients and investors and the people out there need our support and our guidance and our advice. So I think that's something important for us to keep in mind too.
Morena. And thank you, Mark, for those great insights. I think I got challenging, fast-paced, play it safe, but capture every opportunity that's coming up.
Yep. Like
Perfect.
any good economist or strategist, I'm hedging my bets.
Good work. So I pulled out my questions actually from the fireside chat with Grant Robertson back in 2017. The headline at that point was a rise in interest rates from 4.85% to 5.85% would lead to a 12% increase in fortnightly repayments. So on the theme of politics, and if you were Chippy being sworn in today, what would your focus be?
Yeah, it's going to be interesting. I think, if you look at the sort of rhetoric out there, people believe that this has shifted things further in favour of a change of government. I wouldn't underestimate Hipkins. He's an experienced politician, he's quite astute, and if he is able to take the opportunity to maybe reset some of those unpopular policies of the last 12 months, migration's a big one for me, those immigration settings. That's something I hear right up and down the country from businesses that I talk to as something we haven't got quite right. I know there's other ones too. There's the farming sector, the business sector don't feel as heard by the government as they believe they should. There's the talk around sort of three waters and co-governance. So whether he'll walk back or water down some of those unpopular policies, I'm not sure, but I suspect he will take the opportunity to try and distance himself and reset things to a degree. So my suspicion is that the election could still be closer than many people think if he uses that opportunity. So I wouldn't be underestimating him.
Thank you. There's lots of great questions coming through Slido, so keep those questions coming through. A question come through around, would appreciate your thoughts, Mark, please, on tackling inflation through increased KiwiSaver contributions versus increasing interest rates.
Yeah, that's a tough one. I mean, inflation, you look at the causes of inflation and it's multifaceted. I think it was the San Francisco Federal Reserve that did some really good work looking at US inflation, and what they found is that probably 50% of the inflation pressures are supply side related anyway. Mm-hmm. It's because of shipping channels that aren't working as they should. It's because of factory closures in China, and that's another positive that we'll hopefully see change this year. It's all of those factors. So it's not just the demand side pressures, which is all of us spending money. So I think some of those supply side issues, you've just got to wait for things to unblock, unclog and go back to normal, which we are seeing happen. Interest rates, raising interest rates takes money out of our pocket, it makes life more difficult, it makes us curb our spending, it encourages us to save or invest rather than spend and borrow. So that'll work, and it is working. We just need to give it time because there's a lag, particularly here in New Zealand where we all fix our mortgages. You know, we're quite different to the Aussies, just an example, where they have, I think 2/3 of their mortgages are on floating rates. So they get that cut through from a higher interest rate immediately. Here in New Zealand, the Reserve Bank increased the OCR, and it's not until we go and refix the mortgage that it actually hits us in the pocket. That'll work, that'll happen, and it is happening. We just need to give it a bit more time. KiwiSaver contributions, look, as an industry, we'd all like to see that. We'd like to see the government, and this government, as opposed to the opposition, the current opposition has been more proactive in terms of growing and building KiwiSaver, and it was obviously their initiative in the first place. So as an industry, we all want to see that. We want to improve the savings backdrop, and I would love to see more incentives, be they sort of on the tax front or otherwise, to encourage that. But on inflation, I still think higher interest rates is the best tool to impact that demand side inflation, and sadly it does come at a cost.
And so on that point, I think, do you see a risk of the RBNZ going further on rate hikes? You touched on it earlier.
Yeah, they'll go further from here. So they're at 4.25. The next meeting is next month, February. So, you know, people are talking whether it's 0.5% or another 0.75. I'm probably in the former camp. I think, I'm hopeful that if we see further signs of moderating inflation later this morning, and other indicators that we all follow, forward-looking ones sort of point to things coming off the boil. We know there's a whole lot of people that have refixed their mortgages in the first 6 months of this year, and that will be ugly for some people, and it will impact the economy. So if you see things move in the right direction, let's hope they don't have to go as far as the 5.5% that they're guiding to, but I think they will need to get a couple more under their belt from where they are today.
Thanks. You've talked a lot about the easing, some of the easing concerns and some of it coming off. What do you think of those tail risks for 2023 that you're still worried about, geopolitically,
Yep.
COVID mutations, etc.?
Yep, the COVID one's a tough one to pick, but that's always there. I feel like the geopolitical one is probably top of mind for me. You know, there are still a lot of geopolitical risks out there, and that's something that's incredibly hard to predict or evaluate or plan for. We obviously saw the Russian invasion of Ukraine a year ago, and sadly that situation hasn't got a whole lot better. It hasn't got terribly worse, but it hasn't got any better either. So we'd like to see an end to that conflict. But you've still got things like the US and China bubbling away. There's still sort of Taiwan. There's other, we haven't talked about the Middle East in a while because there's been other things that there have been to focus on. But I feel like in markets, it's often the things that you're not worried about that sort of come out of left field and might hit you. So, you know, while we're all wrapped up in this whole interest rates, inflation, COVID, worrying about those things, we can't take our eye off sort of some of those issues that might be in the background.
Yep, that's certainly how it plays out. A question here from the audience: do you think that ESG momentum will be adversely impacted by the bearish, uncertain economic outlook?
Yeah, maybe it just slows down some of the interest in sort of ESG and sustainability investing. Big picture, no, I don't think so. I think that is just a snowball that sort of gets bigger all the time, and you know, it's so topical and so important to investors that it has to be important to corporates, fund managers, wealth managers, all of us in the industry. So I can't see that slowing down in a big picture sense. I guess where it gets tricky is that you have a year like last year where you know, you have commodity prices that are very strong, you have an energy crisis, and some of those parts of the market that are maybe not so ESG friendly, like the energy sector, actually perform quite well, and it reminds the average investor that they do pay a price in the short term for maybe having a sustainable investing approach, and that's not a bad thing. That's just a reality. It just maybe forces them to sort of firm up in their mind what they're trying to achieve and acknowledge that.
Going back to global, have we reached a tipping point with the population challenges in China and Japan?
Yep, well, Japan's had the demographics against it for years, and I think that is still probably the case. It's really tough. There's some great companies in Japan, but I really struggle to see to get positive on that part of the world from an economic perspective. Demographics is one reason there, an ageing population. The whole world has an ageing population, so it's not just a Western world story, it's an emerging market and a China story as well. And obviously the confirmation this year that for the first time in I think 60 odd years China's population is shrinking is a reminder of that. Places like India still have a more attractive demographic profile when you're thinking about sort of growth and so forth. But yeah, the world has an ageing population, and that is something that we need to think about when we're considering investment themes, growth, what it means for inflation and other factors.
Great, thanks. Last question from the audience is, what is the outlook for company profits?
I think they probably look too high. When you look at analyst forecasts, take the US market for example, and I always talk about the US, it's the biggest market in the world, the biggest economy in the world. So if we look at all the bottom-up analyst predictions for 2023 in terms of the calendar year, the expectation is that in aggregate you'll see a decline of 3 or 4% compared to 2022. It's probably still a little bit optimistic. Typically in a recession, and the jury's still out whether we have a recession. If I had to have a guess, I'd say 60% chance in the US. So better than even, but not inevitable that we avoid it or that they avoid it. But if you do have a recession, then typically corporate profits fall 10 or 15%. So if you're in the recession camp and if you think it's going to be a tough year out there, then company profit forecasts are probably a little bit too high, and that's one of the reasons I think that a lot of us are just a little bit cautious about the market outlook. But time will tell. We're in the middle of the US reporting season at the moment. The New Zealand earnings season and Australian will start next month, so we'll get a good read on how corporate New Zealand is looking at that point.
Great, thanks. And just we have one last question before Richard pops back up here. Back to politics, national-led government. What one change do you think they might be pushing between now and the election around the economy?
Yeah, that's an interesting one. I think it's important to note that we actually haven't heard a lot from National about what their policy settings will look like. So as we get close to the election, they will have to give us a bit more clarity about what they would do differently and be more specific about that. We haven't seen those specifics, so it's hard to judge whether they will be better or worse or just different, and in what area. The housing market is probably something that I'm going to keep a close eye on, because I think that a lot of the policies Labor's put in place, whether it's sort of the interest deductibility or some of the other policy settings, have been quite unfriendly to the housing market, and that has probably exacerbated the decline that we've seen. House prices would have fallen anyway. That's probably made it a slightly bigger decline. For me, really important to monitor whether National would unwind some of those changes and make housing as an investment class look more attractive, because that obviously impacts those of us that are, in other areas of the investment landscape. So that's something I'll be keeping a close eye on.
Perfect, thanks. Well, a lot for us to look out in over the next 6 months, following what has been a challenging period. Thank you very much for your insights, Mark, and we'll welcome Richard back up to the stage to close.
Thanks for having me.
Wow, what a stimulating and interesting morning. A huge thank you to all of the speakers. If I just quickly try and wrap, things I heard this morning about focusing on outcomes. I heard that we've got 3 big changes around regulatory change in the financial advice, the COFI and the CRD landscape. I heard about the balance between engagement and enforcement and credible deterrence. I was really pleased to hear about the important role that industry bodies can play, and certainly the FSC is the voice of the sector, is trying to make sure that there were a broad umbrella where everyone has a space and a place to meet, to connect and to contribute. So Sam, thank you for those comments. I heard as well that helping customers and educating customers is important, and in this next 12 months that's never been more important, because we aren't in bull markets, we're absolutely in the reverse. I heard we have lots of headwinds in front of us, but I heard some cause for optimism as well. And I heard that 2022 was a super tough year, but 2023 there are green shoots of optimism, and I think on that note for all of us that's probably somewhere to leave. So in closing, a huge big thank you to all the speakers who participated, to all the delegates who attended. You know, this is an FSC gathering, we are a community, we're not just in an industry. I look around the room, I see people who are chairs and co-chairs, contributors in committees, help shape parts of what we do, help lead discussions. So we're a highly connected, a highly collaborative and a highly learning community, and I think for us and as a sector that puts us in a really strong position to help New Zealanders navigate some fairly tricky and tough waters in the year ahead. So with that folks, a huge big thank you. Have an awesome year, have an awesome rest of the week, and safe travels from wherever you come from. Mā te wā.